Good evening, everyone. Welcome to the webinar. My name is Hari Swaminathan. I'm the founder of Optiontiger.com. Today, we're going to talk about some very interesting aspects of the options market. And I know several of you came from Udemy or other places, may not be very familiar with the options market. So I do want to give you a, uh, it's sort of like a good news, bad news kind of a thing, but you do need to be aware of the options market. And one of the things I think, if you talk to any options trader who's been in the markets for a while, they'll tell you that one of the big things with options is that to have a consistent performance, and that's difficult. It's difficult to get a consistent performance. We can have good trades, you can have great trades, but to do it on a daily basis, repeat it daily or weekly or monthly basis, it's somewhat difficult, and there is a very good reason for that. So we'll look into all of that. My name is Hari Swaminathan, and I've been an options trader for about 9 years now. And the first couple of years have been fairly challenging. I would admit that I was having great trades just like anyone else, and but to do it on a consistent basis, something or the other came up and broke that consistency cycle every now and then. So you'll have three good trades in a row. The fourth one, you'll tend to give back a lot of the profits that you made in the first three. And this was something that bothered me. Had several sleepless nights over it. And so, over the years, that's one thing I've realized, that to get the better of the options market is a pretty tough thing. So we'll get into those details as we go along. I have a bachelor's degree in engineering from India, and I have a MBA from Columbia in New York. And I don't come from a Wall Street background or anything. I've mostly been an entrepreneur, have had a couple of several companies before Optiontiger itself. And so I would consider myself as an entrepreneur, and happen to jump into options from a more of a hobby, and then it became a passion. And I realized that the markets, and specifically options, is really where I wanted to build out my second part of the career. The first part was all in technology and project management and software consultancy services, things like that. Anyway, so let me just give you a quick overview of Optiontiger. I know many of you are new, so this will give you a very quick overview. I started Optiontiger with the goal of educating options traders, and so the first thing I did was create these 47 courses that goes from complete beginner. You need not know anything about the markets or options for that matter, and it'll take you from complete beginner to very advanced levels. And so that's a set of 47 courses. Each of those courses at least 1 to 1.5 hours long, and it covers everything that you need to know about options, from the fundamentals, the theory, the math behind it. And then of course then we move quickly into the trading platform, and it's a very practical sort of courseware curriculum. Also have, over the last 3 years, have built up a YouTube channel with about 400 videos, and most of it, 95% of it, is all free. So you can subscribe to the YouTube channel and you'll be automatically notified. Also have several courses on Udemy as well. So let's go ahead and take a look at that. Udemy, this is my profile. I have almost 10,000 students there. All my courses mostly are all 5 stars, as you can see, and there's 2 pages of them. But whatever you'll find at Udemy, you'll also find at Optiontiger. Probably Optiontiger is going to be cheaper because Udemy takes a very large percentage of any sale. But Udemy does have some sales of their own, and so that's out of my control. And so you might be able to catch one of those specials there. Otherwise, on Optiontiger itself, the courseware is divided into beginner, intermediate, and advanced, and all of those are at least 13, 14 courses each. And it takes you from a beginner to all the way to advanced levels. And today this is what we're going to talk about, is the proprietary trading systems, and there are several of them, and we'll basically just touch upon them, and I'll give you a better idea of what they are. Okay, so some of those, the proprietary systems is CondorMAX, which is an iron condor and a credit spread trading system. Very elite, very exclusive intellectual property there. IncomeMax strategies are somewhat simpler, yeah, and if you're a beginner to options, probably these strategies would be good for you to tackle simple strategies like debit spreads and credit spreads. Credit spreads is a more involved thing. I think if you get to the credit spread level, you really want to look at the CondorMAX. The day trade and the swing trade systems are basically chart based, pattern based systems, and you can have very good returns in a short time. And then, of course, not all your trades are going to go in your favor. So we do have the risk management and adjustment techniques also included as part of that. EarningsMAX is what we are doing right now. We are in the middle of earnings season, and it's actually been a fairly disappointing earnings season. Most stocks have reported less than what was expected. So, in general, there is a sort of downdraft in the earnings. Of course, yesterday, on Friday, Amazon came and went up 40, $50, but even it's a loss of 13 cents. So really only Netflix sort of had a very good earnings report to speak of. Everybody else has, basically been somewhat lackluster. But the earnings max is a playbook of about six different kinds of trades, and so we'll talk about that as well. WeeklyMax is once again, a very detailed, insightful look at what these weekly options are. If you've traded weekly options for any length of time, you know that they can be very powerful, very explosive, but they also come with a very, not peculiar, but a unique set of risks and risk characteristics. So you have to be aware of them. The one of the more recent products is the ETFMax, and this is more suitable for longer term traders and IRA accounts and retirement accounts and things like that. So we'll take a brief look at all of these systems. Then there will be a special offer for all the people who are at the webinar, and we'll open it up for Q&A. So hopefully you'll have a lot of questions, and we can discuss all of these things, or you can even pose any kind of general question if you want to discuss it. Anytime you have a question, please go ahead and type it into the question box. I will take all the questions in the end, but just so you don't forget your question, just go ahead and type it in the question box, and we'll try to come back to all of those questions. All right, so having done with the intro, let's look at the options market. And if, like I said, if you're new to the, or somewhat new to the options market, which I know many of you are, um, there is a good news, bad news kind of a situation with options, which we don't have in stocks or futures and most other products. This does not exist. And let's look at the bad news first. The bad news is the options market is structured very much like the casino market, and where if you look at the casinos and you say, okay, that's the house, and so when we walk into a casino and we want to play any kind of casino games, we know that the casinos have an edge, and statistically they have an edge. The more you play, the more that statistical edge goes over to the casino side. However, as consumers, when we walk into a casino, we almost always expecting to lose, because we go in there with with an entertainment value also, and so if we lose a few bucks, we don't mind. But when we come to the options market, we don't come with that kind. I mean, there's no entertainment value here. I mean, this is real stuff. So we want to make money. However, both the models are just the same. So if you think of the market maker business, and if you think of the options market itself, we are, whenever we place a trade, there is almost, we almost never interact with another trader. We always interact with the market maker. Now, there are several market makers for for stocks, and so all of them are competing for business, but they are all market makers nonetheless. So the market makers take the risk on this trade, and of course they have ways of offsetting that risk with other trades. But when we as a retail trader we put in our order, we are actually dealing with the market maker. So it's no different from a casino. If you look at it, you go and play a game of blackjack or craps. You're playing against the casino, and so the casino has an edge, and the market maker similarly has an edge, because if you think about it, if they don't have an edge, if they don't legally have an edge, why would they be market makers? Why would they take the risk of hundreds and thousands and tens of thousands of trades um, if they don't have an advantage on each and every trade? So of course they're not going to be winners on every trade. Obviously we also win. However, you have to understand that the market maker has a statistical edge, and that edge really plays out in their favor over the long run. And so the converse is also true for us. So in the long run, we don't have an edge. And so it's very important to realize this, because it's no different from the casino. The more you stay in the casino, the more you're going to give that edge back to the casino. And it's no different with the market maker. So this is where this is where I started thinking. Once you get into the options market for a year or two, you realize that this is how the tables are laid out, and you understand that, okay, the edge is not on our side, and therefore every trade that you take, you have to try to put some edge on your side. You have to try to put some edge, because if you just keep on repeating your trades, okay, I'm going to do a bull call spread today, I'm going to do it on Google, and there's no real there's no real edge on the trade, except for you think it's going to be a good trade. But other than that, if you don't build in a certain edge into your trade, statistically you're going to give that edge to the market maker. And the problem with traders is, we are almost always we are in fishing mode. So in fishing mode, I mean, we are constantly trying new things, right? I mean, and you have to try, because if you don't try, you don't learn. So there's a certain learning aspect that goes with the trying. But the problem is, this trying is very expensive, and then you have to add the fact that we have transaction costs, we make emotional mistakes, and sometimes we even panic, and do the wrong things. And so all of that, if you add up all of that, it becomes a big problem. It becomes a very big consistency problem. So even if you have two or three or four great trades, you'll see that on one or two bad trades, you tend to give up a lot of the profit, if not all of it. And so, in the long run, we do have an issue. And so we have to somehow try to build that edge into every trade, and we have to try to maintain that. And so this is really the basis of what Optiontiger products are all designed with. They cannot be 100% foolproof strategy anywhere. We all know that. However, if we approach any strategy with some kind of a systematic view, and say, okay, if the stock does this, I'm going to do this. If it does this, I'm going to do this. Or if it does this, I'm going to do this. If there's like two or three possibilities, and you know exactly what you're going to do, and if you can construct the trade with some kind of an edge to ourselves, then that is the best you can ask for. And in the options market, it's always better to have, and this I've learned by experience, it's better to have a consistent, repeatable approach with a few techniques, rather than fishing and experimenting and trying new things all the time. Granted, like I said in the beginning, you have to try, you have to experiment, because if you don't do that, you don't know what the consequences are of doing certain things. And so you have to learn that. And it's great if you can learn it with paper money, if you take the seriousness and you learn it with paper money. But we are human, we are all human, and paper money is just doesn't cut it sometimes, because your emotion is not there. It's not real money. So trading with paper money and trading with real money are two different things. And so you want to try things with paper money, but at the same time, at some point, you have to move into the real money situation. And that's where I think you'll see that you behave a little differently when it's real money. But regardless, the goal is, you want to try to give yourself an edge. And part of the system that gives you an edge also is you need to know how to manage the risk in the, okay, let's say we are doing a bull call. Okay, where can the bull call help, where can the bull call go wrong? And if it goes wrong in this way, how how is it that we can handle that situation? So you need to be prepared. And so for any strategy that you do, you need to be prepared with a couple of risk management techniques and a couple of trade management techniques. And so without that, it's obviously going to be tough. And that's when you start fishing and you start losing. And especially when we are dealing with credit spreads and condors, you always have to have an additional level of safety, because a bird in hand is always worth two in the bush when it comes to these kinds of strategies. So let's now talk about the individual strategies. And if you've traded, if you're somewhat advanced trader, you would have come to the point where you're trading credit spreads and iron condors. And so one of the problems with credit spreads or iron condors, it's great because it's a time decay strategy, and in general, if the stock doesn't make a huge move, you tend to come out ahead. However, a huge move will really put you into trouble. We know that, and especially for iron condors, it can go either way, right? Either on the plus side or the minus side. If there is a huge move, then the iron condor can get into trouble. So the CondorMAX system is actually pretty elite, and it is designed to make an iron condor flash crash proof. It is not scared of big moves in either direction. And in general, the base case is that it's designed to generate a return of 5 to 10% from every iron condor. So if you're an iron condor or a credit spread trader, this thing works out very well. And of course, it tackles the negatives of iron condors. You don't have to worry about these large moves. You don't have to worry about huge spikes in volatility. It is all it sort of manages by itself. And so this is actually very elite. It's one of Optiontiger's most elite products, and you can use it for credit spreads as well as iron condors. The IncomeMax strategies are a little bit more basic. So here we are dealing with debit spreads and straddle systems. If you have a trending stock, then you can use the spread system for. Sorry about that. You can use the spread system for the trending stocks, and you can use the straddle system for volatile stocks. Once again, there are two, three components to it. One component is the income generation for each of these systems. Then you have your risk containment or your risk management and your adjustment techniques. So both of these systems, in fact, all of Optiontiger systems, you will have the risk management, you will have the income generation, and you will have the trade management. That is, these three are core to all the Optiontiger systems. Then we have the chart base, the DayTradeMAX and the SwingtradeMAX. Generally, you can a day trade, of course, as the name sounds, it's very short term. We could be out of the trade in minutes or in hours. Perhaps we'll keep it overnight. But swing trade is slightly more longer term. We keep for about 1 to 3 weeks. And the indicators are customized. They produce very good, powerful signals to give us high probability trade entries, except for the time frame where the day trade is much more shorter term and the swing trade is about 1 to 3 weeks. There's really not much of a difference in approach. The indicators are different, the customization is different, of course all of that is different, but the approach to the trading system is basically somewhat the same, and we depend on some indicators. And of course, just like anything else, no indicators, no system, no kind of signal is going to be perfect all the time. And so we do have our risk management, aspects of it also in place over there. And it's mostly a numbers game. So what we mean is, if we can get 7 clear winners out of 10, and if we are able to adjust one or two that went against us, if we are able to adjust ourselves to come back to at least a break even, then we're doing good. Because in general, on the winners we should make much more than the losers. And so over the last 1 to 1.5 years, these systems have become really refined now. And in fact, on the losers, we try very hard not to lose more than 20-30%, whereas on the winners we can make 30, 40, 50, 60%. So the systems try to make money in two ways. One is we get clear 7 to 8 winners out of 10, and two, on the winners we try to win a lot more than what we lose on the losers. And so yeah, that's also becoming better. So for these systems, I also run a combo trading room, and of course this is optional. The systems themselves have everything that you need to be able to operate on your own. However, if you either don't have time, and that's what most customers who either don't have time or they just want to come in to the room for a couple of months to get the feel of how to go about with these trades, and then once they do that, then they are able to run on their own, and that's perfectly fine. That's really what the room is designed for, is to handhold you for a couple of months maybe, and after that, if you leave the room and go off on your own, there's absolutely no hard feelings. That's really what the room is designed for. So that those are the chart based systems, the pattern based systems. So the options part of it in these systems are very less. However, of course we do use options, but they're not some complex strategy or anything. We start off with long options, we adjust into a debit spread, we adjust into a credit spread. That's about it. That's the chart based systems. Let's see. EarningsMAX is what we are doing right now. It's a playbook of about 6 different types of trades, and frankly, this earnings report has been going quite well so far. We've had one bad trade on IBM. IBM, as you know, it reported last week, and it sort of stayed right there. It had no movement at all. And so that trade, we are in a little bit of trouble. We are still managing it and adjusting it, and hopefully we can make the best out of it. But Netflix was a blockbuster, 90%, and then we had a couple of other trades. On Friday, we closed Amazon and Condor for almost 30%, which is really good. Amazon, of course, made a big move, but we were able to do some quick adjustment tactics and get out of it. So EarningsMAX is also, you've got to understand the interplay between volatility and time decay that happens during earnings season. So it's got a lot of option stuff in it, some very good analysis and how to approach earnings trades. So that's what EarningsMAX is all about. Weekly options is, and I just realized I forgot a very important system on this presentation, which is AdjustMAX. AdjustMAX is a complete set of adjustment strategies. I'm just going to talk about it when I talk about WeeklyMax, because the two of them really go hand in hand. In fact, the AdjustMAX, the WeeklyMax, and the CondorMAX, these three are the most elite systems that we have. And between these three, you should see your options trading skills really taken to one of the highest levels possible with these. So, but AdjustMAX basically is a general product. It's a complete adjustment philosophy, adjustment approach for every kind of trade, whether it's a long option, whether it's a debit spread, credit spread, condors, diagonals, calendars, all of it. So that's really very cool. And weekly options, of course, as you may know that it's become very, very popular over the last 3-4 years. In fact, I believe in 2015, weekly options volume is going to exceed the monthly options, at least as far as the indices are concerned, the SPX and all of that. So weekly options are really, really catching on. They have a lot of flexibility now, because we have options for 1 week, we have options for 2 weeks, 3 weeks, and then of course you have the monthly. So pretty much you can you have this entire set of flexibility. So how do we match up the 1 week with the 2 week, or the 2 week with the 3 week? There's a real sort of strategic angle there, how we can match up. So WeeklyMax looks at all of that, and for every kind of trade, once again, whether it's a long option, whether it's a credit spread or a calendar, we analyze what is the best way to approach it when it comes to weekly options? Which week is better? Is it the front week? Is it the week behind that? How do we structure these things? And so that's really what weekly max is all about. Very cool stuff, I must say. Because and I don't think anybody can ignore weekly options anymore, even if you have like a full-time job or anything. Previously weeklies, you only had 1 week of weekly options. And so weekly options were mostly the play of hardcore traders and very active traders. However, now given that we have weekly options for the front week, the back week, and the third week, weekly options really has become a play for anybody now. And so it's very important to really understand, because in the final 1 month all these options go through a significant change in behavior. And so that's really what we are talking about. And within when it changes, there are some characteristics that are in favor of our of us traders, and there are some characteristics that go against us. And so our objective should be to realize what it is and be aware of which ones can we take advantage of, which ones can we exploit, and which ones we need to watch very carefully. Because with weekly options, if you don't watch this, then it will bite you. So that's the thing. But you can get some explosive returns with weekly options. So there's a lot of reward there. There's a lot of risk also. You want to be aware of the risks, and you want to stay clear of them. And that's really what the weekly max product is all about. The ETF Max, many people think ETFs are boring, and if you just look at the ETF, yes, perhaps they seem boring. But as we know, ETFs have many advantages. They are instantly diversified. They have lots of liquidity. They are very global. You're not really playing one stock. You're playing an entire sector or a country or a currency or whatever the case might be. But ETFs can produce very low risk and very high reward trades. They tend to trend much better than normal stocks. They're not so volatile, so you don't see ETFs dropping 3%, 4%, all the time. Those are very, very rare cases. But and so there is a certain element of stability there. And ETF trades are also based on the business cycles, because when the business cycle is on an expansion, certain ETFs, certain industries, certain countries will do better. And so ETFs can really take advantage of all of that. Most importantly, ETF Max really is for the slightly longer term investor, international investors who may not have all that extra time to monitor US markets, people who have retirement accounts, because you really don't want to see too much volatility on those kinds of accounts. Very low risk but very high reward trade. So ETF Max is also one of the latest products, and it's the options part again is minimal. We use simple long calls, long puts, and simple adjustment strategies. But mostly it's a product that is suited for a specific kind of investor, which is retirement accounts, longer term investing, who don't want to be involved with day to day stuff and all of that. So I do want to talk about the options courseware just briefly, because I think this is where most newcomers to options make the mistake. They don't focus on the education. Options are very different from stocks or futures or any other instrument for that matter. Options are mathematical. The people who designed options got a Nobel Prize. You've probably heard of the Black-Scholes model. Fisher Black and Myron Scholes, they won Nobel Prizes. So this is some deep stuff there. Fortunately, we don't have to worry about the deep stuff, because just like we don't have to know how a car, an automobile engine is put together, we just need to know how to drive it, and that's exactly what options are. But even then, I find that so many people disregard the importance of understanding these instruments, and I think that's a very big mistake. Because over the last 3 years, I can tell you I've received at least 500 to 1,000 emails where people send me their position. Oh, this is what I did. I'm down 3,000, 5,000 on this trade. How can I do something about it? And for the most part, everybody, the trade has gone to such a point where it's just not salvageable at all. And unfortunately, I see this all the time. So I would say, don't skimp on the education. You take advantage of some good deals, especially Optiontiger. I can tell you that Optiontiger yeah, products are some of the best you'll find out there. um, so with any of these products, with all of these products, my goal is to teach you how to fish and not feed you fish. So you'll see me get into the details of how you should be approaching all these different strategies, options in general, how you need to really look at trading, and in a very practical sense. The theory is important, but what we really are doing is how practical can we be when we look at options. So at the end of it all, with all these products, you're going to come with go away with very superior options trading knowledge. Like I said, I teach you to fish, not feed you fish. The sophisticated tactics that are included in all these systems can be applied for any trades, and really that should be your goal. That should be your goal with options. You know all these different tactics. Now, if you're faced with a situation on something that is not covered in any of these at all, if you're faced with a situation, you know exactly what is the right adjustment for that situation. And so that's really the goal. If you're able to come up with the perfect adjustment in no more than 5 seconds, then you've gotten there, and that's really what it is. So these are some of the things you can do to take a systematic approach to perform in a consistent manner, both for the short term and for the long term. So once again, the I know many people here have bought some things, they have not. So it's really hard for me to come up with a some kind of a standardized order. So what I want to do is something different this time. I want you to send me an email. I'm all these products here you can see on the proprietary systems, they're priced anywhere from 497 to 697. But for having attended this webinar and for signing up with Optiontiger, I do want to give some very attractive discounts. So you'll see that these bundles are about 399 each, and I say 30% off because if you were to buy these individual courses, they're all 50 each, and the bundle itself is 399. But I'm willing to give a further. I'm going to be giving a further discount to that as well. And if you the more you can combine, the better discount I can give. And so, given that there are a lot of things here, it's hard for me to come up with a specific kind of a deal. But what I want you guys to do is to go through all these things, because all of them have some detailed information here. There is an intro video. There is various things below it. Customer testimonials. What exactly these systems are all about, and depending on which stage you are, you will have to you'll have to see which products you want. Obviously, I think if you bundle more products, I'm obviously going to give you a higher discount. So just go ahead, look at it, and I'm going to keep this open till next Sunday. So you have a week to do this. But if you can send me an email to info@optiontiger.com. I know you might have already have one or two of the products, so it's difficult for me to say exactly what but the discounts will be good. It'll be good anywhere from 25% to 50%. Obviously, the more you bundle together, I can give a better discount. All right, so that's really what I have. I want to open it up for Q&A because I'm sure you'll have some questions. Anytime you have any questions, you can email me at info@optiontiger.com. Not specifically for this deal or just this deal. You can always email me for anything. And I see a few questions here. And one of the ones prominent is Gregory White. I'm sorry, Greg. I don't know what to tell you. This is a second webinar that you can't hear. Everybody else can. So let me see, Greg. Let me just reply to Greg. Last week also he had this problem. So not sure what that is, but let me just quickly reply to him. Okay. So anyway, so that was Greg. So yeah, I know, Ben. Thanks. Yeah. So the here, let me see. Let me just start from the beginning where the questions are. I'm just going to take a sip of water and just look through the questions. Okay. William asked, "Can the slides be downloaded?" Yes, I can do something. Let me see what I can do. I will send you the slides when I'm sending the recording for the webinar. Okay, I can do that. Yeah. So and yes, I can do that. No sound from webinar. That's Greg. Do you use the strategies for trading FX options? Asks Andre. So, yeah, you can do. Yeah, yeah, of course. Options are options, Andre. So you can use all of these strategies as long as they are options. So if you're trading the euro, you won't be trading the euro USD pair, but you'd be trading the FXE, which is the ETF for the euro USD pair, as you may know. But and we'll be trading the options for that currency, and so that's how you would trade it. So it's a little different from your FX, where you actually trade the what do you call spot FX, but here there's no spot. Here we're going to trade the options for that. What are the inputs for the strategies? The inputs are pure option prices, and there is something called the Greeks, if you're not aware, but that's what we use. It's all part of the options beginner stuff. If you look at the options beginner, some of this stuff is covered there. Andre, very, very good question you've asked after that is, are these strategies black boxes? Absolutely not. With options, it's very difficult to have a black box kind of a system unless you are a huge hedge fund with a lot of resources to do a lot of number crunching and have a bunch of algorithmic programmers working in your back office and all of that. But unless it's that kind of a scenario, it's very difficult to create a what do you call a black box, because with options there are lots of moving parts, and as individual traders it's really hard to do it. As hedge funds, I know people have started doing it. There is one hedge fund in Pennsylvania, Susquehanna Management. They are supposed to be the absolute experts of algorithmic black box trading for using options, and it's very difficult to do that, and unless you have some big resources in your back office, it's hard to do that. All right, loud and clear. Can't hear these webinars. Yeah, I'm sorry. I don't know why it doesn't work, Greg. I apologize, but I don't think it's at my end. All right, Ben. Okay, that's good. Gene, yep, good to see you, Gene. Gene, awesome products. What is your outlook for Twitter and Baidu? Uh, so that is coming up next week, right? Twitter is when? When is Twitter? Baidu is. See, Baidu, I'm concerned a little bit because last 2 quarters, they've sort of been a little soft. Baidu's on the 29th, and Twitter should do well, I think. Twitter and LinkedIn are two of these social networks where their graph has just started to look up, and so that's good. They're nowhere near saturation, and so both of these, I would say, Twitter and LinkedIn definitely are. LinkedIn is the valuation is very, very high. I can tell you that. For the amount of earnings and revenues they do, the valuation is very high. Twitter also is high, but Twitter is improving their revenue situation. So nobody is going to be caring about the high valuation for some more time. I think once they start maturing, like Facebook and things like that, then they will start to look at the valuation. But I think both of them should be up. Baidu, I'm not so sure, Gene. Baidu, I have a concern because last couple of quarters they have disappointed. All right. Sam says I have all except ETFMax. Okay, I'll just send me an email, Sam. We'll definitely work with that. And let's see, EarningsMAX, Randall. Yep, I know you already have the EarningsMAX. You're going to be in The EarningsMAX trading room. Okay, yeah. So coming up, that will be for the next EarningsMAX. Is it still open? I wouldn't. I wouldn't. I mean, it's 50% done, Randall. So it's up to you. If you want to get in, I can probably give you a reduced price at this point. But Apple specifically, what we had is what we did with Apple. I'll tell you, and it's turned out to be a fantastic trade so far. About a week ago, what we did was we bought Apple long calls one at the 130 strike, right? So we knew that, or rather, we were expecting that as it approaches earnings date, the stock will try to move up. So about a week or so, 8 days ago, we bought the 130 calls when Apple was at 125 or 126. So, as you know, on Friday, it ended up at 130. So our long calls have made a lot of profit. And what we've done now is to protect that profit by selling the 132 call, and we practically have a free spread on that. So, because the long calls gained so much in value that we almost got the same amount of credit when we sold the 132. So, it's really a what to say, almost a free spread. So that would become a very good trade. And I don't know, each person of course has their own contracts. I have about 15 contracts on that. So if tomorrow Apple goes above 132 after the earnings on my 15 contracts, at least, that's $3,000 profit right there with no loss. Okay, I mean there is no loss possible. Maybe $100. That's it, because the cost of the spread itself is like 10 or 12 cents. Covered call max coming up, Sam. I know the covered call. How to adjust a covered call going bad? The simplest way covered. Okay, so there's two ways a covered call can go bad. One is if the stock is crashing and the value of your stock is going down, but the covered call really, is near zero. So, you've maxed out on your cover call. So that's one way of getting, that's one way of, covered call going bad. The second way of covered call going bad is you have the stock and the stock is, the price has moved far higher than the covered call. So it depends on which one. If you can tell me which one you're talking about, I can give you a specific tactic tonight itself. All right, Ranjit, can you provide a mapping of the level of experience with these products? Okay, very good question. Very good question. Okay. So I would say, let's go take a look at the first slide. Okay, so here we are. All right. The CondorMAX and the weekly and the AdjustMAX is something I think everybody needs to have. If you're trading options, you really need to look at AdjustMAX, because that is something that applies to every adjustment. And we know that there are very, very few trades where you enter and exit. It's never like that. I mean, 90% of trades you go through adjustment. CondorMAX is definitely the most advanced, I can say. But CondorMAX, WeeklyMax, and AdjustMAX really go together. The three of them are like, three legs of a very solid stool. After that is EarningsMAX is more complicated. Other than that, ETFMax, DayTrade, IncomeMaX, these are much, much more simpler strategies. So basically, there are four simple ones. In fact, it's laid out, and I had made a mistake in the pricing earlier when I set it up. My site went through a change. So when I set it up, I'd made a mistake. But basically, you will find four of these courses at the 497 level. So, your ETFMax, I'd actually made it. I originally was 697. Nobody bought it at that price, but it's at 497, because that's what the real price is. So you'll see four systems at 497 and four systems at 697, and that's because of the complexity or the advanced nature of the systems that's really dictates the pricing. And of course, there's obviously more intellectual property there. There's much more substance there in these, in these higher systems. But that's really what drives it. So CondorMAX obviously is going to be 697, and this is just like very, very elite stuff. Okay. So, and pretty much you can design every iron condor and manage it properly to give you a 5 to 10% return, which is a very tough thing to say, because iron condors they're very, very popular, but they also have a lot of negatives. And you'll see that once you do you do 3 or 4 good trades, one trade can become bad. But using this system, you can protect yourself against that. All right. How much minimum capital is required for your strategies? It's not just my strategies, Naveen. I know it's a good question. 5K is definitely not enough for CondorMAX. I can tell you that. 5K is okay for your swing trading or your day trade. The problem with day trading is if you go over 3 trades in a week, then the broker will classify you as what do you call a pattern day trader, and so you do want to watch for that. You need to have, if you don't want to be considered a pattern day trader, you would have to have an account of 25K, and then you should be good on that. All right. So okay. So yeah, Sam says on the stock going down. Yeah. So stock going down, your best option is if it's a trend, Sam, just buy a put. And so when you have a long call and you have a short call, which is a cover, basically that's the covered call strategy. And if you buy a put option, that's called a collar trade. And the collar trade is a very, just do a Google search on collar trade. And I just realized that I don't even have any information on a collar trade on my site. So maybe I'll do a quick mini, one of those free mini courses on collars. Collars is actually a very good trade. And if you do a covered call, then if the stock is going against you, you buy a put. And that's how you protect your stock. Okay. If you just want to protect it, you buy enough puts so that the deltas match. If you want to absolutely go the other way and take a more negative delta position, then you buy slightly more number of puts. But that's how you would secure a stock going down. All right. Are these systems still getting updates or additional lessons? I've tried to cover most. I've tried to cover almost everything there, Ronnie. There's really no. I mean, it's not a piece of software, right? So it doesn't really need any update or additional lessons. There are, in some cases, I've already added, especially I believe in. Which one was that? On EarningsMAX, I did a couple of them. On CondorMAX, I did a couple of them. But in general, but it is a good, yeah, if I get time and if I think of it. The problem is when I think of it, I don't have the time to do that right away. And but you're right, I should try to keep some things updated, so I will try my best to do that. All right. Munster says Apple target is 160. Yep. Yep, I agree. 160. But see, when you got to understand one thing. When these analysts say 160, it doesn't mean it's going to go to 160 tomorrow. It means, they generally project it for 6 to 12 months and their target is 160. So I mean, they give themselves enough buffer. So, even if they go wrong, they'll say, "Oh yeah, it's going to be, in 12 months, but something changed in the business or whatever." So but Gene Munster is he's one of the best analysts there is, and he really knows Apple. So I would go with anything that Gene says on Apple, and I follow Gene myself very much. So okay, do you analyze? Andre says, do you analyze? Let me read the question properly. Do you analyze an underlying of the option, or there is analysis of the option data only in the strategies? Only option data for the most part, Andre, except if we are playing with earnings and, like for tomorrow, Apple, it's hard to just make an options trade without having some sort of feel for what Apple is going to do. But other than that, if you're strictly looking at options, options really don't require you to look at the underlying that way. I mean, the underlying could be doing anything. Options being mathematical, you can structure strategies without knowing what the underlying is doing, without even knowing what the underlying is. Like, let's say if you just have a 4 letter symbol, and if you have all the information in the option chain, you frankly don't need to know what stock it is, uh, and you can structure an option strategy. Now, obviously, I don't recommend that. It's always good to know the stocks that you are trading. But just to make a point, I'm saying because options are mathematical, you can construct a strategy that even allows you to take a trade on a stock, which you don't even know what it is. Okay. Open and close considered one trade. Yes. I think you're asking Ben about the pattern day trader. Yes. So if you open a trade today and if you close it today, that's a day trade. Oh, by the way, guys, there is a whole set of free courses. If you guys are not new, you're new and you haven't come to this place, just come here. And I know all of you already registered, so I want to I've been going to ask my developer how to sort that issue if people are already registered. But there's about 40 free courses here. One of them is the pattern day trader. Okay, so just come here, and I've created a free mini course. These are all mini courses, so I would say anywhere between 10 to 15 minutes at most. But it takes one topic and drills it down really well in detail, so that at least for that topic you know what it is. So pattern day trader rule is covered here. So feel free to come here and check out this free course. It'll be good for everybody to know. Even if you don't day trade, it's good for you to know this. Basically, the bottom line I'll just explain is, if you have an account over 25,000, clearly over 25, like 35, 40, 50 or more, you obviously don't have an issue. But if you have an account of less than 25, then what happens is the SEC doesn't want you to day trade too much. And so they give you 3 day trades a week, 3 day trades in a 5 day window. Okay. So, and after that, 3 day trades, then if you continue to day trade, they will classify you as a, they will actually, they will restrict your account for 90 days. Okay. So it's pretty serious. So if you have an account of less than 25K, you really need to take this rule very seriously. And it's an SEC rule. It's not a broker rule. 10K good for IncomeMax, little less, Sam. I would say on the straddles it's fine. Spreads also it's okay. You can do it, but you'll run into this. The IncomeMax is not a day trading system, but the problem, you have to keep an eye out for this day trade business, okay? Because I see many people getting into trouble, even if they are not day trading. They, sometimes they want to take an adjustment, and if the adjustment doesn't really work out, they want to close the adjustment, so that becomes a day trade. And so you want to be a little careful of these. If you have 10K or less, I would say just do the swing trade system. Okay, the swing trade system is anyway a 1 to 3 week kind of thing. It generally will keep you clear of the day trading issues because it's more of a swing trading system. Um, so um, you know you won't run into the day trade. And on the swing trading system, you can deploy even as low as $400, $500 on a one contract or two contract position, and still be able to make 20, 30, 40% on that. And as long as you keep, you stay clear of the day trading rule, you should be good with that. So I would recommend the swing trading system more than anything else. The problem with spreads and everything, see, when you're dealing with the four-legged spread, your commissions are going to be high, and so you want to take all of that into consideration when when you do this. Okay. All right. So we're getting a deal on a new purchase. Yeah, this is all based on a new purchase. Yeah, past purchases are past purchases, David. If there is new products that have come, and in fact, over the next 1 or 2 months, I'm actually going to release a very, very interesting product. I'll talk about it later. You should get an email from me. But here, you just tell me what you're interested in, David, and obviously, what you've done in the past is something that I will, consider. So just go ahead and send me an email of what which products you're interested in, including any of the education stuff. Okay, so you guys can look at not just all these products, but also look at the education. There's an entire courseware which includes all 47 courses in Optiontiger. You can look at that as well. Whatever you're interested in, just gather it up into a bundle and let me know what your interest is in, which ones you're interested in, and I'll do my best. Yeah, and of course, what you've done in the past will be given consideration there. Um, For active traders, Randall, yes, they will be. And they might want to see your active trading volume first before they commit to it. I know you and me have had many discussions before. So, given your situation, I would say they would probably give you a ticket fee, meaning a fixed fee of about, let's say, 4.95, and they'll probably give you anywhere between 55 and 75 cents a contract. Okay. By the way, guys, if you want to do active trading, your best platform is going to be Interactive Brokers for that. Okay, where thinkorswim and is really good is in the analysis. So when we're looking at iron condor analysis, when you're looking at butterfly, or when you're looking at any kind of complex strategy analysis, the thinkorswim platform is obviously fantastic. But if you look at the real trading, the commissions, the trading engine, I would say Interactive Brokers is any day better than Thinkorswim, because just a simple changing an order on Thinkorswim, you have to go through 4 or 5 steps, whereas in Interactive Brokers, you have a price field, and if your previous order was set at 50 cents and you want to make it 55, you just put your cursor into that price field and change the 50 to 55. That's it. On thinkorswim, you have to go and say, oh, change and cancel and replace this order. That will take you to a different screen. You put that, and then there is a confirm and send, and blah blah blah. I mean, it takes it's crazy. The market moves by then in fast moving markets. So I actually don't like the thinkorswim execution side of things. The Interactive Brokers is definitely better. And I think, Ace, your next question might be, yep. What about your thoughts on Options House instead of using TDMA? Okay, correct me if I'm wrong. Is Options House the ones that just bought a Trade Monster? Somebody bought Trade Monster just now. Just now meaning in the last 1 to 2 months, and I think it's Options House. If that is the case, Trade Monster is a very good platform. Yeah, that's correct. Okay, so Trade Monster is a very good platform. The only thing again with Trade Monster is its analysis. Okay, so now I don't know. What Options House has in terms of analysis, and I don't know which platform they're going to be using for trading. Are they going to be using their old Options House platform and they just bought Trade Monster for their user base, or they're going to use the Trade Monster platform? Because I think the Trade Monster platform is actually better. But once again, it's the analysis that they really fall short on. They have some very fancy. I've used Trade Monster before. I like their platform, but they have a different way of analyzing it. They have a very different way of analysis, and I'm not sure that really is helpful for the trader. Okay. No, no, Andre, with options, you cannot have a set and forget. That's just another way of asking if it's a black box. No, it's not. And unfortunately, with options, you won't get it like that. You can set yourself some alerts based on if the stock falls a certain amount or rises a certain amount. You can set an alert, and once you get an alert, you're already ready with your adjustment tactics. Okay, so Andre, it seems like I think what might be helpful to you is one of these beginner modules. Check it out, and you send me an email. I'll give you a good deal, and I can throw in probably the beginners and the intermediate bundle for you at a very good price, or things like that. Just send me an email and we'll take it. But once you get a little bit of understanding, I think that's really where you'll have a very good idea of, okay, is this something that I want to do? Because people who trade options, I can tell you, people who've really gotten into options will not trade anything else. Will never trade stocks, will never trade futures, none of that stuff, because there is just unlimited risk on both sides. We will never trade that. Whereas options are limited risk, unlimited reward kind of. We can get into those kind of scenarios. So and when you play options, you're playing chess. When you play stocks or anything else, you're playing checkers. So it's a very simple one-dimensional game. Either it goes up or it goes down. That's it. With options, that's not the case. Even if it goes up and it goes against you, you can still be a winner, because of various time decay strategies and all of that. So it's more of a chess game than checkers. Any hedging education? I do. It's not comprehensive, Ron. The If you look at my advanced module, there is I think one or two courses on hedging and risk management. Yeah, in the intermediate module there is risk management. In the advanced module there is here advanced hedging with futures. I use futures. We futures. Andre, I think you're forex, right? Yeah, we use futures. Not we. I use futures. If there is overnight movement, somewhere else in the world, and it's going to impact our positions, because options, our markets are open only 9:30 a.m. Eastern time to 4 p.m. So the issue with options is you are exposed to overnight movement, overnight news, and all that kind of stuff. So I use futures, and I have a course here also. If you're an options trader and you have options positions, and if you wanted to hedge against something that's happening around the world, how would you use futures to hedge your position overnight? And that's really what this is. But other than that, I would look at the intermediate module, and there is a module called, there's a course called risk management. I think I cover some of the basic hedging and everything there. Can you use paper trading with toss? And yeah, of course, you can use that. The problem with paper trading is if you haven't funded the real, the minimum that they have, then what is it? They give you a delayed quote by 20 minutes. Okay, so you just have to watch for that. Just make sure, if because if you have a delayed quote, then it doesn't make for a very good practice environment, because option prices changes a lot within 20 minutes. I assume you could recommend IB for execution and toss for analysis. Absolutely. That's what I do, Ben. IB for execution and toss for analysis. So, and especially for these, what do you call these simpler trades? Okay. What I found is problematic is if you execute a condor kind of a complex trade on IB, but you have simulated the trade on toss, right? Most people will say, hey, I can simulate it on toss and I can execute it on IB. Okay, that's good for, when you're starting out the trade. But as the trade progresses, you're going to make adjustments, you're going to do all of that. It's hard to duplicate all that activity on toss. Okay, so the way I've done it now is I use IB for my day trading, swing trading, simple trading, perhaps no more complex than a debit spread. Anything more complex than that, I do it on my toss account. All right. Okay. Yep. Sure. Paper trading, and yeah. Higher money requirement? No, I don't think so. I don't think so. If you don't have 10K iBroker's full benefit, do you recommend to start off with? Yeah, sure. You can start off with TD Ameritrade. The problem with TD Ameritrade is with a 10K account, you will, they won't give you very good commissions. That is the problem with TD. TD Ameritrade is the largest broker now in the world, and so they've become too corporate. And when it was just think or swim earlier, we could negotiate a lot of things. I remember in 2010 and 11, think or swim used to be so flexible, but after they've become part of TD Ameritrade, it's become very difficult to get anything done with them. All right. Yep. Thanks, Andre. That's good. Okay. Basically, switching between brokerage houses are a good thing. Just stick to one. Depends on how complex you're doing. Like I said, if it's complex strategies, then I think you would want think or swim, at least for analysis. Even if you don't execute anything there, at least for analysis. So put in a minimum, whatever they ask for, $100, $200, and keep that minimum open. And then what you can do is do the analysis there. But I wouldn't switch too many brokerage houses, because each time you're going to have to learn a new platform, and there's a lot of slip that can happen when you're learning these platforms and how they operate. So I wouldn't recommend that too much. Binary options are more simpler, Jared. It's a very good question. I think, yeah, let me give you, see, with binary options, because the time frames are so small. Okay, so for those of you who don't know what binary options are, binary is something that you can bet yes or no. Okay, so like tomorrow, if you can say it, like the S&P is at 2117 right now. All right, so you could have a binary option that says, is the S&P going to cross 2125 tomorrow, yes or no? Now obviously the probabilities for yes is different from the probabilities for no, and so the cost of this binary option, the cost of going with a yes or cost of going with a no, is going to be different. What And so they're much more simpler. They're much more of a gamble, because not too much of your mathematics and your strategy can really apply there. um, where I find binary options really against the trader is, on average, if you bet $1, your return is, let's say, 80 cents, maybe even less than that, sometimes a little bit more, but most of the time you're giving a 20-point edge to the market maker. That is a very serious edge, and with that kind of an edge over the long run, you cannot make money, you cannot be profitable. Here, even in the regular options business, we are talking of an edge of maybe 5, 7, 8%. But with a 20% edge to the market maker, it is impossible to make money in the long run. So, I mean, and see, the way I look at it is, the way to clearly know whether you can make money in binary options or not is to look at something like this, right? So, let me give you an example. If you're watching TV, and if you see one of these ads, which are the most popular ads that you see on all these regular nationwide channels, your national networks. The On every other time, it's either this Viagra or your Cialis or one of those types, or it is who is being threatened by the IRS. Okay, so whenever you see this kind of blatant advertising, you know that that is an issue. That is a big, big issue. And the parallel I want to draw is, binary options are everywhere now. People are willing to pay, especially on Google, binary options, they're willing to pay $30-40 a click to Google, okay, on the cost per click basis. Binary options are everywhere. They're using all kinds of mechanisms to draw in customers. Think about this. The binary options guys give you a bonus if you deposit $500 into a binary options account. There are binary options brokers who will give you a 1:1 bonus. I mean, how ridiculous can they get? I mean, you're looking at like a blackjack operation, or one of these party poker kind of things, right? Only those guys give that. But here, binary options guys are giving you a bonus, it seems, deposit bonus. It cannot get more ridiculous than that. That itself tells you that they have so much of an edge that they will go to any length to have you open an account, because it's that much of a party for them. All right, on Thinkorswim, reasonable. It all depends on your account, Ronnie. Thinkorswim is very materialistic that way. You put in a $500,000 account, and you say, I'm going to do 1,000 contracts, 2,000 contracts a month, and they will give it to you at 50 cents a contract. Okay, and if you go in with a $25,000 account, and this is where the corporate structure has come into play. If you go in with a 25,000, they will give you $1.50 per contract. So, unfortunately, Thinkorswim, it's not Thinkorswim, it's TD Ameritrade. It's the largest brokerage house in the world, and now they are, it's that kind of corporate pricing is into their products now. Any thoughts on E-mini? I love E-mini. It's again futures. If you're going to trade futures, nothing like the E-mini, But once again, free E-mini is exactly like stocks. Either it can go up or it can go down. And if it goes against you, there's really not much you can do. I mean, you can double down, you can close it for a loss, and that's about it. There's no concept of adjustments. There's no way you can really use any kind of strategy like you would use in chess to provide any kind of defense. And with options that's not the case. In options we do provide defense. It's like you're the general of an army, and you can move things into place that will provide you the defense. Whereas with stocks and e-minis and all, you can't do that. E-minis are highly leveraged, so you sleep, you go for lunch and come back, your account could be looking very, very different, either to the good side or to the bad side. So got to be careful. Can I split an IRA? Those kind of questions, I don't know if you can split an IRA. You'll just have to call the brokerages. I don't see why not. I mean, you can have two accounts with two different brokerages, so you can certainly split it, Randall. But I probably is not the expert to do that. Interactive broker, do they have put call ratio? I'm sure they have. Interactive broker is a fairly good platform. The only place where they fall short is options analysis of the complex strategies, right? Yeah. Okay, no problem, Jared. Be careful if you are trading. I mean, I know binaries are very exciting. There's no question on that, but I would be careful of them. Okay, so just be careful. You don't want to give too much of an edge, because remember, the longer you play, that edge is going to go into their favor. Okay, so that is, you've got to remember that with options, whether it's binary or regular, that part does not change. And in the binary, the edge is just too large on a per trade basis, and it's very difficult to overcome that kind of an edge in the long run. CL is wicked. Yeah. Well, I mean, CL has been one hell of a ride, I tell you. I think finally it's like stabilizing now, but CL was one hell of a ride this year. So the premiums, exactly, Andre. So the premiums of binaries are strongly skewed at the favor of the market maker. See, think about it, right? I mean, here you are, they're trying to make a market for something that's going to happen in 1 hour. Okay. All right. By 11 a.m., is it going to be above this? Is it going to be below this? Okay. So I don't care how good of mathematics you have on your platform. You need a large buffer, what do you call it? Safety, margin of safety for that. And that's the problem. It's not that binary options market makers are evil. That's not the case. Well, some of them could be, but what I'm trying to say is their mathematics cannot be perfect, and so they give themselves a much more larger margin of error. The binaries are obviously more simpler to understand than regular options, so much more of the mainstream crowd seem to be getting attracted to that. And it so and those guys, and the brokers make a lot of money, there is also, and I'm not sure exactly where things stand with this, but at least a year or year and a half ago, the US regulators were looking down on binaries, as if it was, a fraud kind of a product. And so there is an element there's a negative PR element that binary options face in the US. And I'm not 100% sure of what the details are, but I know that that's, something like that exists over here. So, all right, man, these are all great questions. Great questions. So anyway, so if you guys think of any more questions, just email me. And if you wanted to get any of the stuff, just email me, and I'm here to work with everyone. So just info at optiontiger.com. Let me just type that in. I think everybody should know that. But feel free to send me an email with whatever your interest is, and we'll go from there. Also, let's see what tomorrow. Well, now the markets are still flat, so Apple looks bullish for earnings. I think a good trade. You know, don't buy tomorrow's options or even the next week. I mean, the volatility is going to be very, very high. Actually, Apple, it's a little too late to get into the trade now. But Apple should do well. Should do well in all in all likelihood. Okay. All right. Yeah, it is. It is. It is, Andre. So the premiums of binary options are strongly skewed in favor of the market makers. Yep. All right. Okay, great. Good. Thanks, Ben. Great hearing from you. And hope everyone has a great evening. See you guys in the markets. See you guys, on a next webinar or something. Take care and, trade small sizes and be careful. All right. So talk to you guys soon. Thanks a lot. Good night.